Hi, I'm Jaqueline P'ng and you're watching the Edge TV Evening Highlights. Buying gold as a hedge against currency depreciation is nothing new, notwithstanding the risk. But is it happening in Malaysia in the wake of the ringgit's continued weakness, especially with the price of gold at a near 6-year lows? Leading gold retailer P'ng says some Malaysians are resorting to gold investments as a hedge against the falling ringgit. But it adds that the overall demand for gold is not good at the moment.
With the depreciating ringgit, so there are actually some people buying gold as a hedge against this depreciation of ringgit. So these few factors that will actually prop up the demand, even though the sentiment overall is not as good.
Xiao acknowledges that business had been tough post-GST, but it has seen a pickup in sales recently. Head of Corporate Affairs, Margaret Hon, expects profit of FY16 to be at the same level or even higher than last year.
This year will remain challenging. Of course, the Board of Directors is still remain confident that we will be able to hopefully achieve better results than what we have actually achieved last year.
P'ng raked in a net profit of 13.7 million ringgit in FY15, which is 2.7% higher from 13.3 million ringgit a year earlier. Hon adds that the company has implemented cost control initiatives and introduced more affordable products. P'ng plans to open 3 to 5 new stores this year compared to 7 last year. It is allocating a capital expenditure of up to 5 million ringgit per store. MIER is estimating the country's GDP growth for last year at 4.9%, and it says this year's growth will weaken to 4.7%. This is still more optimistic than the 4.5% projected by others, including the World Bank. MIER, or the Malaysian Institute of Economic Research, says its 2016 forecast is based on MIF's assumption of average crude oil prices at $47.97 a barrel. It is also based on the ringgit assumption for exports at between 420 and 430 against the US dollar. The think tank says the economy will continue to be domestically driven and remain fundamentally strong. But stabilization issues will need to be addressed, including the narrowing net current account surplus. Also, the continuing portfolio outflows, ringgit depreciation, and tightening of domestic liquidity conditions. MIER says manufacturers are cautious following the poor performance by most industries in the fourth quarter of last year. This was due to slow local orders and deterioration in external orders, and the situation is expected to continue in the first quarter of this year. The healthcare sector in Malaysia has been developing rapidly in recent years and has one of the highest multipliers in the country's economy. But amid the economic uncertainties and volatile operating environment this year, what is in store for the sector? Sulhi Azman has the answer.
This year is expected to be a challenging year for many industries and sectors. However, according to Frost & Sullivan consultant, the healthcare sector will continue to remain resilient given continuing demand for healthcare services and products. Frost & Sullivan partner Ranu Buller expects Malaysia's healthcare expenditure to increase this year. This was in view of the continued rise in chronic diseases, healthcare costs, as well as the weaker ringgit. Last year, Malaysia's healthcare expenditure was between 13 and 14 billion US dollars.
I think from a healthcare expenditure perspective, we've looked at some historical data, and we've also looked at some of the rates of, let's say, chronic diseases and infectious diseases that we have. And based on some of the projections we have, we estimate that the expenditure on healthcare in Malaysia could be as high as $20 billion by 2020 if we keep on this current trajectory.
Buller also touched on the possible impact of the TPPA on the healthcare sector. According to Buller, 40% of the industry players think it will give consumer more benefits.
We ran a survey actually on the impact of TPPA among various industry players in Southeast Asia, and about 40% or so felt that TPPA would actually have a positive impact on the industry because it gives consumers choices. About maybe 20% or so are very concerned that it would make the industry too competitive. But I think it is a way that we can provide consumers with more choices, and at the same time, because we have our own local products, we could also use that locally, build that up locally for use within Malaysia itself.
Buller was speaking at a Healthcare Outlook presentation in Kuala Lumpur today.
And that wraps up the evening highlights. I'm Jaqueline P'ng. Thank you for watching.